and welcome to video 2 of the Trading for Complete Beginners series. In this video, I'm going to share an introduction to trading stocks. Let's get right into it. What is trading stocks? First of all, let's think of a farmer's market. A collective market where you can buy or sell different goods such as eggs, meat, vegetables. You get the idea. The concept is very similar, except for with the stock market, we're able to buy and sell stocks, also known as shares, which involves ownership of a small piece of a company. You can find different stock markets all over the world, but one of the most popular stock markets is the American stock market, where you can buy and sell well-known companies such as Facebook, Apple, Amazon, and Google. These more established companies are also known as large cap, due to their large capital. If you want to trade large cap stocks, then generally you're going to need more capital to afford them. Large cap stocks prices start from around $20 per share, depending on the company. Let's look at an example for Facebook. Let's say that we feel that Facebook is going to go up, that we think the value of the company Facebook is going to rise, and so we want to purchase this with the idea that we're going to hold the asset whilst the price increases and then sell it at a higher price than what we initially paid for, thus making the difference between the two. So at the moment, as we can see here on the right hand side, Facebook is currently at £279.72 per share. In this example, we're going to look to buy Facebook as it crosses the price of £280 per share. And in this example, we're going to buy 100 shares. So to be able to buy 100 shares of Facebook, which is currently at $280 per share, we need a balance of $28,000 to be able to buy this asset. So the price of Facebook's shares are increasing, and we're currently long into this at £280 per share. And as the price continues to increase for Facebook, we've decided to sell our position at $281 per share. So we've sold 100 shares at $281 per share, making a profit of $28,100. So the difference between these two figures are $100. So we've made $100 on this trade. As well as large cap stocks, there are also small cap stocks, which are smaller growing companies with smaller capital, therefore they tend to be cheaper to trade. Their stock prices are usually between $1 and $10 per share. So for example, let's say that we're buying 100 shares of a stock, a small cap stock that's priced at $5 per share. So in effect, we need $500 up front to be able to buy that asset. We're then waiting for that asset to rise in value so that we can look to make a profit, and the asset rises from $5 to $6 per share. When it hits $6 per share, we sell our 100 share position. So we're able to sell those for $600. And the difference that we have made there is $100. And that's how you can make money in the stock market, from the rise and the fall of prices of the shares. Whether we are trading small cap stocks or large cap stocks, generally we can make around about the same money. It just depends on what your actual budget is for being able to buy stocks in the first place. As small cap stocks are generally lower in capital, they can be a lot more accessible for people who have a lower budget to be able to buy the stocks in the first place, making them a really good place to start if you're looking to get into trading. However, it's important to understand that small cap stocks and large cap stocks tend to move very differently, and it's why it's really important to learn as much about them as possible and create your trade plan or your strategy. Well, that's it for this short introduction into trading stocks. I hope you've enjoyed the video. If you have, be sure to hit the like button, and if you're not already subscribed, make sure you're subscribed below so that you'll catch the notification for the next video where we will explore trading the foreign exchange market. Thank you. Bye.